receive as the CTC is the annual cost to the company translates into what is popularly known as the salary slip, which is the amount that is paid to you on a monthly basis. So a simple calculation would be your CTC divided by 12 is what you receive as your monthly salary. Well, to help you understand this better, let us take an example of Mr. Rocket Singh, who is a character from the film by the same name. The film follows the journey of Mr. Rocket Singh, who wanted to be a salesperson. He gets an opportunity to join a company and follows him all through in terms of what he faces in his role as a salesperson. Taking him as an example, let's have a look at what his CTC was and what was his salary slip, which is a consequence of the CTC that was offered to him. If you look at the offer letter which was given to Mr. Rocket Singh, he was offered a CTC of 12 lakhs along with 22 paid leaves that were offered to him in a particular year. When he looks at the CTC of 12 lakhs, what he thinks in his mind is that he is going to receive an amount of INR 1 lakh every month in his bank account. If you look at the breakup of his CTC, we find that there are a number of components that add up to the total cost of 12 lakhs. We have a basic component, we have a special allowance, there is HRA, there is leave travel allowance, there is food allowance and telephone reimbursements. All of these components together add up to a gross salary of 1 lakh rupees per month or 12 lakh rupees per annum, which is the CTC that was offered to Rocket Singh. In addition to these fixed components, there are a number of variable components that he is eligible for, starting with the performance variable bonus, which is up to an amount of 1.5 lakhs if he were to perform well in the company. There is a gratuity amount which is statutorily payable if he were to work for the minimum duration of 5 years. In addition to the gratuity, he is also being offered an ESOP, which is basically an employee stock option, subject to him fulfilling certain performance parameters within the company. Now, looking at the CTC of 12 lakhs, while Rocket Singh is expecting to receive 1 lakh in his bank account at the end of the first month of his employment, when he receives his salary slip, what he sees is that he has been paid out an amount of 72,800 rupees. So while he expected to receive a lakh of rupees, he received only 72,800, and when he looked at his salary slip, what he saw was that all his earnings were mentioned on one side of the slip and all the deductions were on the other side. A run through the earnings will help you understand that the earnings are exactly a replica of what is there in his CTC. He has his basic component, he has special allowance, he has HRA, leave travel allowance, food allowance and telephone reimbursement. All of it totals to an amount of 1 lakh rupees per month, which is equal to his CTC. What Rocket Singh did not expect or did not anticipate was the deductions on the right hand side of the salary slip. If you look at his deductions, he has an employee contribution to EPF of 6,000, an employer's contribution to EPF of 6,000, he has a profession tax deduction of 200 and finally an income tax deduction of 15,000. After accounting for all these deductions, what is left is an amount of 72,800 which was credited to his bank account. The salary slip that you see is a document which is pretty important to you as an employee because it is an evidence of your employment after you started working for a particular company. It is a proof of the fact that you are hired by the company as a permanent employee, and it is also an evidence of the remuneration that is being paid to you as an employee. This evidence that you have with you works as a base document for a number of scenarios. For example, if you plan to take a loan tomorrow, the salary slip acts as a proof of your remuneration and in turn determines your eligibility of the amount of loan that you want to take. The salary slip also forms a basis of the document that you would provide when you are preparing and filing your income tax return. At the end of each year, when you file your taxes with the government, offering your income to be taxed and also claiming whatever taxes have already been paid, the salary slip acts as a very good document. It also works as a starting point for you to negotiate your salary with your prospective employers when you're moving or changing your jobs from your current employment to a new employment. When that is the case, they would definitely want to look at your salary slip to understand what you're getting paid, and that forms as the base of negotiating for a further hike in pay in the future. When Rocket Singh received his salary, he had more questions than answers that he could think of as to why was the salary slip was the way it is and what can he do to increase the amount that he can get credited to his bank account. While he expected an amount of a lakh of rupees, what he got was only 72,800. So like any new employee, he had a number of questions that we are going to answer during the duration of this course. Some of the questions that Rocket Singh had included that there is so much amount of tax being deducted from my earnings. Is there a way that I can reduce my tax liability? He also had a lot of questions on the breakup of the various earning components on the left hand side of his salary slip, as he did not understand all those components. Talking to his colleagues, he had heard that he has to submit certain bills as a way to reduce his taxes, but he was pretty clueless on how to go about doing it. And in the first week of his employment, he receives the form 12BB from his HR asking them to fill it up. And then again, since being his first employment, he was pretty clueless of what should he reply to the HR. Lastly, he saw that one of the largest deductions from his salary was that amount of 24,000, which was being deposited into a fund which is called the EPF fund. Again, he wasn't very clear where this money was going, how the EPF fund would benefit him, and what should he do in terms of whether he should continue with the fund or does he have an option of not contributing towards the EPF fund. The reason Rocket Singh had so many questions was because of the fact that he expected a credit of 1 lakh rupees in his account, whereas what he received was almost 30% lesser than what he expected. While that is actually a norm and not something which is out of sync, that your receipts in your bank account are always going to be much lower than what you see in the CTC. In the next few questions, we are going to try and answer each and every component of the salary slip and help you understand why a particular amount is computed the way you see it in your salary slip and what you can do to minimize the taxes that you pay and maximize the credit that you receive in your bank account.